Hey guys, Stockaholics, thank you guys for being here today. We're going to revisit tankers. We're going to take a look into tanker land today, see what's going on. This is the June 2021 tanker update, and we're going to entitle it No Pain, No Gain for this one. We're going to take a look at rates. We're going to take a look at new buildings. We'll take a look at scrapping. We'll take a look at oil demand, see how that's increasing in the COVID environment we're in. And there's a few articles that I thought are very interesting, and we'll share those with you guys. And I'll kind of give you guys my thoughts on how I see sentiment in the industry, and I'll share perhaps what I'm doing with tankers presently. Okay, so let's start with tanker rates. Tanker rates are horrible. They're not very well, although I'm only showing the crude segment on this slide here. The same is true for the product segment. It's very similar graph here. The product and the crude segment, they're doing very poorly at this time. But there's some things to think about. You know, currently we're in the summer months. There's not a lot of demand for tankers. For us to really gauge supply and demand, or for me personally to gauge the supply and demand of tankers to see if there's a real imbalance or if there isn't, I'm looking to this winter to see what the rates look like. But for now, rates are bad. So first of all, in terms of deliveries, there's been deliveries, there's been an increased supply of tankers recently, but those were coming no matter what. I think maybe more importantly, we could look at the new orders, see what the order book looks like in terms of tankers. And this is one of the good news. Some of the good news with tankers is that outside of these early months in the year, January, February, March, we're starting to see some anemic orders in tankers. And hopefully that is because there's probably I think a lot of tanker owners who were flush with cash in 2019 and 2020, they decided to go out and purchase ships. But you know, it's been a year now, and rates have been very low, very poor for most tanker owners out there for a year now. So hopefully that is what we are starting to see here, where there's some pain in the market, and then they can no longer go out and purchase new ships, or perhaps that we're starting to see that sentiment in the industry might slightly be changing, where there's people who aren't as excited to go out and buy vessels. Okay, so last month I showed you guys this. This was the tankers sold for recycling. I got this from, and I've been getting this, by the way, from the Nordic American website, tankers website. They have a link that they were posting to this report from Poten on a weekly basis, and I was using them. But for the last month or so, I've noticed that they no longer, it's either Poten is no longer publishing this tankers sold in terms of this beautiful graphical format, or Nordic American Tankers is no longer interested in sharing this information with the public, which I wouldn't be surprised. But I don't have access to this information anymore. So if you guys have access to something that it kind of has this, either Poten or some other source that has access to this a visual and graphical, either weekly or monthly format for scrapping data, and you could show me that, or you guys can perhaps email that to me, I would be greatly appreciative of that. So if you could maybe share that in the comments below. Instead, I had to go and do a deep dive, and just to find this took me a long time. So this is the Compass Maritime weekly report. They publish scrapping data, but it's not in this kind of format where you can see what's going on a short time scale basis. Basically, they publish recycling statistics, and then they just kind of add it to on a yearly basis. So they do publish this on a weekly basis, but for now, if I can't find another source, I'll be using this, and then I'll just be measuring the difference in this each time I do a tanker update. So some of the things you notice, though, by the way, in the year, in terms of scrapping, you know, if you compare it to 2019 and 2020, yes, scrapping is picking up. there is beginning to be some scrapping out there. We see some. There's been 9 VLCCs in 2020 so far, and we're only 2021, and we're only halfway through the year so far, and that's already the same as it was in 2019. Suezmaxes, a couple of them. There's a bunch of Aframaxes that's been scrapped, and then we've seen a few Panamaxes. There's also been some articles out there in terms of product tanker scrapping. I haven't really seen anywhere that really tracks recycling of product tankers in a really detailed basis. I think the reason for that is that a lot of product tankers could be move over to the crude side once they get to about 15 years of age, and you don't really see that. So there is some scrapping that happens sometimes, but more. What is often the case, I think, is a lot of those product vessels simply move to the crude side of the market. But anyway, we're starting to see recycling tick up. If you guys have an access to a source, please, a better source than this, please let me know. But for now, I'll be using this. By the way, one more thing I wanted to mention with this is that although scrapping is picking up, if we look back to 2017, 2018 kind of levels of scrapping, these are the levels of scrapping that I'm looking for to really get excited in scrapping. And that's just not where we are yet. We need to see 2 or 3 times as many vessels being scrapped by the end of this year for me to really start to get very excited. So scrapping rates still remain very high, which is interesting because, we've had some higher than average scrapping rates for tankers for a while now, but there hasn't been a lot of scrapping. So even though that there's these really high demolition prices, it isn't going out. It's not motivating these tanker owners to go and scrap them. Instead, there's so much optimism in the market. There's a lot of companies that made a lot of money in the last year or two, and they're just not interested in scrapping their vessels, despite the tremendous values in steel that you can currently have. Now, I have a strong opinion on commodities. I made a few videos on lumber, copper, other commodities, and I have a very strong opinion on steel. And I don't really think that these levels that we are currently at are sustainable levels of steel pricing. I think that these are high prices, and I think that the cure for high prices is high prices. So to me, it's really disappointing to see that what is likely to, in my opinion, to be a temporary event in terms of pricing and this high pricing of steel, and a lot of tanker owners not going out and taking advantage of that. All right, so there is some good news. We're going to take a look at oil demand. In this video, we are only going to take a look at aviation, and the reason we're only looking at aviation is because most segments in terms of oil demand are largely resuming their 2019 levels of demand. The laggard for the last several months has largely been aviation or jet fuel. So we're going to take a look at this to kind of gauge what's going on, and I think there's some good news here. If we look at total flights, this is taken from Flight Radar, by the way. This black line here is 2021, and this red line here is 2019. Now, we all know in 2020, the virus that cannot be named disrupted a few things, especially in terms of aviation. But I think what we're starting to see is that we're getting very close to 2019 levels of, at least in terms of total flights. Now, the laggard in the aviation industry is largely commercial flights or like passenger flights and those kinds of things. Yeah. So this black line here, although there's still a gap here, which I think largely accounts for this gap up here, we're starting to see that there's an uptrend. And I think in the next 6 or so months, we are very likely to be in about the same place that we were in 2019 in terms of commercial flights. An anecdote for you guys, this isn't representative of this trend, but for me, myself personally, I am going to be going on a trip. I am going to be going on a flight to visit my family on the mainland in the United States in a few weeks. So I think that this is representative of a lot of people. I think that we're very likely to see this growth trend in July and August really increase. when for the last year or so, a lot of people have been locked down and unable to fly. So we'll see though, but that's just my personal hypothesis. Okay, I wanted to share a couple of articles with you guys. Both of these are from Potent and Partners. They have a weekly opinion on tankers. Very cool. You can get these emailed to you. I'll put a link for these below, but they are very useful, and I've been reading these. I think these reflect a lot of the things I noticed, so that's particularly why I'm sharing these with you guys. I noticed there's a lot of authors who talk about some different things in the industry, and sometimes I feel like they gauge things in a rosier way than they should. I don't know what their motivations for doing that are. For example, recently I read a few articles about product tanker scrapping, where the product tanker scrapping rates have been very high, and they say that compared to recent years, right? But there's kind of a distortion when you're describing it to 2019 and 2020 levels of scrapping, because there was almost no scrapping during that time, right? So what I think Potent does, I think they kind of have a very a balanced view, or maybe a slightly pessimistic view on the tanker market, but I think it's very good. So I wanted to share these two articles with you guys. So this is the Potent tanker opinion from a month ago, May 14th. It is a month old, but I think it has a lot of value. Okay, so the tanker market is out of balance. So this is something I've been saying for a while. I think that it is likely to be the case. Now, I don't know for sure. I think we'll find out this winter time. If rates are above a certain level, we'll know that there's not enough tankers. But I think more likely there is probably an excess supply of tankers. Okay, so the tanker market is out of balance. The tanker pundits seem to be in either one of two camps. The optimists foresee a rapid recovery of rates in the second half of 2021, driven by COVID demand recovery, while the pessimists don't see any recovery before 2022 or even 2023. For me, I don't know. What I know that there are signals. I can't use a timeline to gauge this accurately, but I know that there's certain behaviors that will either cause the market to do poorly or to do better. The behaviors we want to see are scrapping, right? And we want to see less purchases, for example, right? So if that happens in 2022, great. If it doesn't, then it will have to happen a little bit later, right? It all depends on behavior, right? Everybody agrees that the tanker market will recover, myself included. It is cyclical, but people disagree on the timing. In this week's Tanker Opinion, we're going to look at developments in ton-mile demand for crude oil tankers. Okay, so back in 2019, pre-pandemic, the average demand for crude oil transportation was approximately 29 billion ton miles per day. In 2020, when COVID took place, that tanker demand declined 24 BTM per day. So there was a 17% drop in oil demand, like most of us know, right? So from September 2020 through January 2021, ton-mile demand has gradually recovered, although it still remained below 2019 levels. So there's some good news. OPEC plus producers mostly maintain. This is actually, this is one of the things that's really surprising, is that there's been such compliance with OPEC plus, which compared to the history. But there's some good news that's going to start to change when OPEC starts to open up those taps. There's going to be more oil in the market, right? In January 2021, Saudi Arabia announced in a surprise move that it would unilaterally cut an additional 1 million barrels per day of crude oil production starting in February. The impact of this decision on ton-mile demand is clearly visible. And you can look at these charts over here if you'd like to see that. It cut ton-mile demand by 5.6%. So that's a lot. For April of 2021, the most recent data available, crude oil tanker demand was 25.9 BTM per day, still 10% below the same period of 2019. So this is why it's so hard for me to be optimistic, right? We are still in a lower than average oil demand to a large extent, and yes, that is going to change, but we're not seeing behaviors that we want to see these tankers have. They are not going out and scrapping vessels. Instead, they're adding supply to the market. So we are in a depressed environment, and they're putting more boats on the market, right? So it's like, even if we get to those 2019 levels, is there still going to be an excess supply of ships? And if this current behavior trend continues, yes, there's very likely to be, right? Okay, so there's some light at the end of the title. OPEC is going to increase production. Freight rates are driven by the interplay between tanker demand and supply. It's like I've said, by the way, I have a great video where I talk about the economics of shipping. Very, very good video. You won't find anything like that on YouTube. I've tried. So I'll put a link to that somewhere if you'd like to see the cycles in shipping. I think those are amazing videos, my humble opinion. In the first quarter of 2019, the size of the large tanker fleet, VLCC, Suezmax, and Aframaxes, was approximately 430 million deadweight tons. VLCCs represented 230, MDWTs 53% of the total, while oil and tanker demand dropped significantly during 2020 due to the COVID-19 outbreak. The fleet continued to grow as deliveries continued and scrapping remained low. In April 2021, the size of the crude fleet oil tanker fleet is 11.5% higher than it was in January 2019, while mile demand is 10% lower. Okay, let's see. This article goes on to say there needs to be a supply adjustment. While low rate environment will encourage slow steaming, that's only temporary. By the way, the ships can either choose to sail at higher or lower speeds depending on rates. There's an efficiency that happens, and when there's more and more demand, they start to go faster, right? Let's see. The only quick and permanent answer to the oversupply of tankers, and this is what I'm looking for, is demolition. However, tanker scrapping has not yet picked up in a meaningful way, despite the low tanker rates. So what we noticed from, this is something I've heard sometimes in the past, and some of the cycles we can look at from that, I'll show you guys in a bit. And on average, it takes about 12 to 18 months of depressed rates. So we're starting to get into that period where we really do want to see some increased level of scrapping. So hopefully the tanker owners aren't too optimistic about this demand recovery, and instead they just go out and go out and scrap their ships. Okay, another article. Hopefully this isn't too boring. I thought that this was an amazing article as well. Excited to share it. So yes, it's about a month old, but still I think it has tremendous value, and I think it shows a lot of the things that the tanker market is doing right now. So demolition derby. Will scrapping hold the key to the tanker market recovery? The tanker market has been in the doldrums since the summer of 2020. Like I mentioned, there are simply too many ships available for the limited number of cargoes that need to be shipped. While the main case of the current crisis in the tanker market is unique, the crisis itself is not. And I made a video, we looked back 100 years or so with the tanker market. It's a lot of the same things. It's a different story each time, but that story has the same theme every time, right? So the tanker market is cyclical, and we have seen periods of depressed rates many times in the past. While we are still dealing with the COVID-19 pandemic in many parts of the world, there are a growing number of areas where oil demand seems to have turned the corner: China, United States, Europe. However, this regional demand recovery remains tentative. It has not led to a material increase in seaborne oil flows, and by itself will not drive tanker rates higher into the future. Okay, so vessels have a limited time span. When they are commercially obsolete, they're headed for demolition. By the way, I've seen a chart recently where I noticed that the average age, and despite what a lot of these oil tanker executives will say, has actually been increasing over time. So there's a certain point when, and it might have something to do with the cyclicality of tankers, but what I notice is that there's been a trend for at least the past 5 or so years that the average scrapping age of tankers has actually been going up, right? But anyway, let's see. So the timing of a commercial's obsolescence is unpredictable. In good markets, when rates are high, owners are incentivized to keep their vessels in operation. They will spend money on maintenance and take their vessels through special surveys to extend their operating lives. In good markets, therefore, the average scrapping age increases. So that might be the case, right? In bad markets, the opposite happens. So maybe that'll start to decrease as these extended troughs continue. Higher maintenance costs and fuel consumption make older vessels less competitive, and low earnings forces owners to be very careful with their spending. And that's what we're hoping for, that they take advantage of those high scrapping rates, right? So far this year, demolition has not picked up significantly. So I've read a lot of articles where they say the scrapping is picking up, but you have to think about it in a long scale, not in terms of just last year, right? So there hasn't been a lot of scrapping compared to 2018 and 2017, right? Starting with the age profile, Some 71 VLCCs, 8.5% of the fleet, will be 20 years or older this year. So that's when we're starting to get into these really old ages where these vessels need to be scrapped. Another 149 ships, 17%, are between 15 and 20. This has a lot to do with that last super cycle. So from about 2003 to 2008, tremendous amount of vessels that were introduced. And this is where we're starting to get into this category, right? And there's going to, so then the next 5 or so years, there's going to be a lot of very old vessels. This group of 222 vessels are the candidates to be scrapped in the coming years because some oil companies don't charter vessels older than 15 years, limiting their employment opportunities. This could push more vessels to the scrapyards. However, this has not happened so far. We suspect that there are a number of reasons for the dearth, I like that word, dearth, of demolition in the VLCC segment. Okay, so one of the other thing we wanted to mention I thought was really cool in this article, they talk about sanctions. So there's some differing views on sanctions. There's some people I've read where they think that limiting or removing sanctions from Iran could lead to scrapping. And then there's others that say, okay, if you remove sanctions from Iran, then a lot of these vessels come onto the market. So I'm not sure if this is either a positive or a negative. Older vessels fetch good prices in the sale and purchase market and are sold for further trading rather than scrapped. A growing number of these vessels end up in the so-called rogue armada, a group of vessels involved in the illicit transfer of Iranian crude oil and/or petroleum products. The U.S. lobby group United Against Nuclear Iran, UANI, has identified 114 vessels, that's a lot, engaged in this trade, of which 23 are VLCCs. So if these are resume a normal trade, is that good or is that bad? I don't know. Now, some of these are very old, and the argument is a lot of these are going to go to the scrapyard. Maybe, right? The growth of this fleet coincides with the 25% growth in Iranian crude oil production and exports since late 2020. These vessels earn premium rates by skirting U.S. sanctions against Iran. If the U.S. and Iran reach an agreement and sanctions are lifted, these rogue vessels will lose their raison d'etre and could be prime scrapping candidates. At the moment, recycling capacity is restricted because scrapyards in India have ceased cutting operations due to the COVID-19 outbreak in the country. There's also certain periods when you can scrap, then it has to do with tides. So depending on where you are in the month, certain vessels can beach, and then there's other times when it can't, by the way. So while scrapping prices are high, that has seldom been a key driver for scrapping behavior, right? Which is one of the things we've noticed. Even though there's some very high scrapping rates, nobody's taking advantage of them, right? Finally, scrapping behavior is heavily influenced by the market outlook of the ship owner. Everybody's still optimistic. Despite the current dismal rate environment, tanker owners are generally bullish about the medium-term prospects as global oil demand recovers post-pandemic. They do not want to miss the boat by scrapping their vessels too early. And what we're going to look at in a second is that usually leads to everybody suffering. Okay, so my concluding thoughts, my concluding remarks I wanted to share with you guys in this video. To me, it seems as though there is still a lot of optimism in tankers. Not only are investors excited about the sector, noting the increase in oil demand, reopening of the economy, but the problem is, so too are tanker owners. So when the tanker owners are optimistic, that leads to certain behaviors that ultimately lead to poor environments for tankers, right? So despite very low rates for approximately a year now, and very high scrapping prices, very few tanker owners are opting to scrap their ships. Meanwhile, new builds remain at average or so levels. Thus, there is an overall increase in tanker supply. And we're still not at 2019 levels in terms of oil demand, right? So there's an excess supply of ships. By the way, even in 2019, the general market wasn't that great. What led to high rates during that time were Trump's sanctions, where there was 100 or so vessels removed from the market, right? So we even from 2019 levels, there was a slight excess of supply. And if that trend continues where there's more supply and not scrapping, there's just, how can this be a good story? You know, there is some unknowns. Like I mentioned, with refinery closures, we're going to have to see how that deals with leads to ton miles during the high rate environments during the winter time. So we'll see this winter time what's going on, and we'll find out. But a lot of the signs, a lot of the things that I'm seeing really remind me of the shipping cycle video I made when I was looking at the economics of shipping. This really reminds me of this period right here in terms of a shipping cycle. A lot of shipping cycles are 4 years, but I think what we could be here in is in this longer shipping cycle, because there are certain behaviors that these tankers are doing that are likely to limit the upside, to limit rates when supply continues to exceed demand. So we'll see. We'll see if that behavior changes. Hopefully that leads to some high scrapping, and if and when we do see that high scrapping, that is a signal for me. That is when, by the way, this usually pairs with the investors being soured when they are depressed. That is the cue for me to get excited about tankers again, when both tankers, the investors, everybody's saying what a lousy industry it is, and it is a lousy industry, by the way. But when that starts to happen, that's what I'm looking for. So for me, like I mentioned in the beginning of this video, if there's no pain in the market, there's no gain. I hope this video was useful to you guys, and I'll see you guys soon.